Understanding transaction costs in foreign exchange. Foreign exchange, forex, is a dynamic and vital aspect of global finance, facilitating international trade and investment by enabling the exchange of one currency for another. However, the process of converting currencies involves costs known as transaction costs. In this video, we will explain the concept of transaction costs in foreign exchange, explaining what they are, and why they matter, and providing a simple example to help you grasp the concept. What are transaction costs in foreign exchange? Transaction costs, often referred to as conversion costs or FX costs, are the expenses incurred when converting one currency into another. These costs emerge due to the fluctuations in exchange rates, the value of one currency in terms of another. When you exchange your currency for another, the rate at which you exchange determines the amount you'll receive in the new currency. Since exchange rates can change rapidly, the amount you ultimately receive can be higher or lower than initially anticipated, leading to transaction costs. Why transaction costs matter? Understanding transaction costs is crucial for individuals, businesses, and investors engaged in international transactions. Here are a few reasons why these costs matter. 1. Budgeting and planning. When engaging in international trade or investment, having a clear understanding of potential transaction costs is essential for accurate budgeting and financial planning. 2. Profit and loss. Businesses that operate across borders need to account for transaction costs, as they can significantly impact profitability. Unanticipated transaction costs can affect the bottom line of a company's financial statements. 3. Investment decisions. Investors need to consider transaction costs when investing in foreign assets. A favorable investment return could be eroded if transaction costs are high. Example of transaction costs. Let's illustrate transaction costs with a simple example. Consider a US-based company, XYZ Electronics, that imports smartphones from Japan. The cost of each smartphone is 10,000 Japanese yen. At the beginning of the year, the exchange rate is 100 Japanese yen equal to $1 United States dollar. If XYZ Electronics buys 1,000 smartphones, the cost would be 10,000 Japanese yen per smartphone, totaling 10 million Japanese yen. Using the exchange rate of 100 Japanese yen equals $1 United States dollar, the cost in USD would be $100,000. This can be obtained by 10 million Japanese yen divided by 100. However, exchange rates aren't fixed and can fluctuate. Let's say that by the time XYZ Electronics pays for the smartphones, the exchange rate has changed to 110 Japanese yen equals $1 United States dollar. Calculation with transaction costs. With the new exchange rate, the cost of 10 million Japanese yen would be $90,909.09. Here, the transaction cost is the difference between the initially estimated cost of $100,000 and the actual cost of $90,909.09, which amounts to $9,090.91. This cost emerged due to the change in the exchange rate.